Well, hello and welcome and welcome and hello and hello and welcome. Happy Friday, you turds. It's Danny Deals coming to you with another exciting edition of Un Poco Mas, the show where we give you just a little bit more. Today being Friday, September 8th, 2023. The time is 9:24 a.m. out here in beautiful Los Angeles. That's your Topper time check, 9:24 a.m. 6 minutes to the bottom of the hour. Guys, today we would like to talk with you about SoFi, ticker symbol SOFI. Today, guys, we have low volume. We have the stock up two or three big pennies, depending on the second that I announced that. So basically flat on the day. We saw our sort of modified mountain and hump pattern on the daily. Sometimes it pushes up the first 15 minutes. This just sold all the way off. Popped under 850, so stop those idiots out who put stop losses at round numbers. Then we had the mountain, and so this is a modified mountain and hump pattern. If you've been following my channel closely, as I'm sure you have on pins and needles, right? Boy, it's exciting. Un poco mas is more than enough for some, and it's just right for others. But I don't know who's been sleeping in my bed. But they're still here. Anyway, guys, sorry, I'm been a long week, a lot going on, slightly sleep deprived, have really not had a chance to concentrate much on stocks this week, just other stuff happening. Life happens. But anyway, I want to basically go over a couple of recent events with the stock. Stephen Fiorio is out with a new article on Seeking Alpha. So, of course, I will, hijack his ideas and comment on them because, again, I believe he's the best writer and analyst in the financial sector, period, and also just specifically with SoFi. Great broadcast over there. I highly recommend SoFi Weekly with not only Steve, but Tanner, Tevis, and Amit. All four gentlemen. You should know their names and respect them and not forget their names under pressure and call two of them dildos. That is inappropriate and disrespectful, and I wholeheartedly apologize once again to Tevis and Amit for my indiscretion. I've been watching the guy Tevis's channel. I forget what it's called. Fundamentals of Investing, I believe. Really, really good stuff. I really like all four of those guys. I don't know. I don't know how many of them are Canadian and who brought them together, but there's a lot of just like garbage on YouTube, guys. It's like, you know, pot meat kettle, but there's so many people out here who are just like talking about levels and talking about bullshit, and they don't really look at what's actually going on with the stock. Is just calling things out on the chart with these sensational graphics and headlines, and so that's why I try to focus on people, that are giving, real analysis, real data, real charts. And Steven is absolutely the best, the best of the best. He's tracking, like, I was reading his article. He's tracking deposit inflows and outflows from 25 banks, 25 financial institutions, sampling like not only the mega banks, like regional banks, like SoFi. And you'll see in his article, which I highly encourage you to read over on Seeking Alpha. Um, I don't get paid by Seeking Alpha. I don't get anything free. I pay full price for my subscription, as I do for all my subscriptions. This believe it or not, this enterprise generates zero revenue, um, but it's just kind of something I enjoy doing, and hopefully some of you turds enjoy watching it. But enough of my ramble, guys. Let's take a look. We've got 7 million shares traded on the day. Very low volume. Now, a lot of people would say low volume is always bearish. I disagree. If you look the last few days, it's like, 23, 19, 17, 18. Very, very low volume for the SoFi stock. You remember the average volume used to be 40 million shares. I view that as bullish in a sense because if you look at the short data, you look at the shares on loan, The shorts and the algorithms are basically letting go of the stock. If you remember, you used to look at this mountain and hump pattern and you'd see these candles that indicate, the volume on a minute by minute or 5 minute basis, depending on whatever chart. And this used to be completely uniform across the day, maybe with the exception of a little bit at the beginning of the end. That's not what we're seeing. I mean, there's still the pattern here, guys, of course, the initial thing, but there's a lot more variation. It's a lot harder to control a stock with uh, low volume of algorithmic trading. Retail investors, live people, were never a big part of that churn. So um, basically, what had been happening ever since the stock sold off from those highs in the 20s, like all the way from last like April and May, is basically market makers have been using SoFi as like a plaything. They make money on it a lot of different ways. They make money on pump and dumps, they make money on short attacks, they make money on stop loss rates, but basically it's like a cat. Like retail has been the string, and you're just being played with. And there's nothing you can do if you think it's a good company, but just the smart thing to do is just buy when they drive the price down into the fours and then just hold on. And, maybe if you can flip some shares on a pump and dump, if you know how to do that and you can time it, wonderful. But the bottom line is you think it's a good company and you think it's irrational that they drive it down into the fours, of course you don't want to sell down there. You want to buy heavily down there. That's the move, guys. And then a lot of people now they're like, oh, I'm going to buy in the sixes. Like I don't think so. This company is very close to making a net profit. It's firing on all cylinders. Remember, the SPAC price was $10. You could have bought it very recently for just over eight. There were really no shares. I know it went under eight once, like pre-market, maybe one other time, but there's really been no shares sold under $8.13 since June. So, market makers are flipping short to long. Data proves this. Let's just take a quick look at the chart over the last month or so. You see 815 after it made that march down from the pump and dump. You saw support along this line, which is 813, just repeatedly, like 6 times. This blue line represents the channel that the stock has been in for the last several months. Um, you see it make a move upward, and then you see the stock this big attack basically to kill options. There's heavy options volume over here at 850, 14,000 short-term calls. Retail probably owns a lot of that bag, and those are being destroyed. So you see, like, I mean, look at the stock price, guys. $8.57, been hovering around that $8.59 range all day. And then if you take a look at max pain calculation, max pain is $8.59. So, guys, don't think that market makers aren't still cleaning your clock one way or another. But if you take a look at this chart, $8.50 was resistance, 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 then consolidated here, like right around the turn of the month, 829, pushed up, and then the last time on 831, 850 became support. Pushed over again, came back down, consolidated. I wouldn't pay that much attention to this like crazy sell-off stop loss attack. It just pushed the stock down below $8.25. Probably stopped out some freaks. They reaccumulated everything there, did it again there. But I mean, bottom line, it bounced off that blue line pretty nicely, and then I think 815, 850 is trying to basically flip to short-term support. We have to see what that happen if that happens. Of course, so much depends on just the overall market, and people saying, "Oh, macro is what matters." They're saying like, the Russell 2000 is going to break down below support level. It's going to drag everything down, guys. I'm of the opinion that no matter what happens in the macro economy, SoFi is going to make that net profit in the next 2 or 3 quarters. I really think it's going to happen in Q4, but with the membership and deposit growth, the deposit inflows we're seeing that we're taking from big banks, as Stephen Furiel notes in his article on Seeking Alpha, um, I just don't see any way that this company is not going to make profit. Like, the adjustments that they're making to their EBITDA, it's like that has to translate to net profit as they scale, and they continue to scale. They continue to add members. We're coming into football season. Those primetime football games attract, over 20 million viewers. You just had a massive run of Taylor Swift concerts at SoFi. You had another massive run of Beyonce concerts at SoFi. And a lot of people make fun of that. They're like, oh, Taylor Swift. Oh, like, guys, these are the biggest, most famous personalities in the world. The people that go to these shows are, I may not agree with their taste in music. Beyonce's got a good voice. Nothing against Taylor Swift, but just not my deal. I'm more of like a classic rock kind of different stuff, but predictable, right? Predictable, but it's incredibly great exposure. And Noto talked a lot about, why they did the stadium deal and how it's been, just completely exceeded their expectations, and things like World Cup and Super Bowl. Those weren't even in their contract, but they got just a tremendous amount of additional exposure. And it's the same with these concerts. Of course, people who hold SoFi credit cards get a big discount on everything inside SoFi Stadium. I think it was 30%, I think, last year, but I'm not sure what it is at this point. But anyway, guys, stadium deal really paying off. So I think fourth quarter, SoFi, the management, Lapointe, Noto, they're setting everything up to make that profit absolutely no matter what happens. And I think they can dial in the numbers however they want. They can dial in the spending, they can dial in the marketing. And I think in Q4, with football season in full swing, they can really slow down on their marketing, customer acquisition spend, and just let those net profits add up to an actual GAAP net profit for the first time in SoFi's history as a company, or certainly as a public company. I don't know if they ever made a profit in the early days. I highly doubt it. But in any case, guys, want to move on, just see what's happening very quickly with a short interest. Don't ignore the insider selling in SoFi Technologies. That brings me to this Jeremy Ritchell, who's the chief technology officer. People are really mad at him. He sold stock, and the site was down the other day all day. And my gripe with SoFi is not that the site went down. Or I'm sure this guy's very smart. He's like an MIT guy, and I'm sure he was working really hard to solve the problem. My problem with SoFi is the lack of communication. They basically don't say anything all day about what's actually happening. They're just like, okay, we're working on it. Yeah, we know you're working on it, but what happened? Do we have any expectation? Are we talking 1 hour, 1 day, 5 days? Are we talking about a hack? Is our data secure? Like, they have to communicate. I want at least updates every hour, every few hours that says, you know, at least as much as you can, at least something to reassure people that the company is on top of things and that they're communicating with their customer. Now, they came back later and they gave me, because I was just bitching and moaning like the Karen that I am. I made a few calls. I'm like, why aren't you guys putting anything on your, Twitter feed, support? Why isn't there a clear message on the website? Of course, their thing, and most corporations, what they want to do is just sort of downplay it, not acknowledge it. Hopefully, most members who aren't active on Invest don't even notice it, and it just water under the bridge and just wish it away. But I think that's a stupid, stupid strategy. I would rather get on top of it, be proactive, and tell members that you're actually working the problem, explain what the problem is, just some type of PR, some type of communication. So I will rescind. I don't think anybody should be fired or anything like that. Again, I'm a big emotional Karen. Um, but you have to learn from your mistakes. It's the same thing they did last time there was a major outage. Just lack of communicate. At least last time they were on Twitter, they were, putting out some type of messaging. This time it was just terrible. And I talked to some people over there at SoFi, like in person, on the telephone, and I really think they're getting the message that communicating with your customers in times of like uncertainty is critical, because if not, like, I wasn't panicking. I didn't think my money disappeared or anything. I just, and I don't have any options at SoFi, nothing really urgent that I needed to do, but I know other people did, and it just really shatters the confidence in that brand. You're trying to build a household brand. You're trying to sell that you have a best-in-class technology stack with Galileo and Technesis, and at the same time, like, you can't get your app working properly. SoFi just does not have the most reliable app in the industry. Like I have other accounts at other banks, and they're far more reliable than SoFi, and that's just my opinion based on my anecdotal observations as a customer at multiple financial institutions. But guys, moving on. The outage was what it was. I hope again they assure me that basically they said the incident was caused by an interruption service and part of our invest platform that collects and organizes market data. As soon as we discovered the issue, our engineering teams worked as fast as possible to resolve the issue. To make sure this doesn't happen again, we are implementing new tools to aid us in detecting and resolving issues before there is an impact on members, and adding additional redundant capabilities to limit potential downtime, blah, blah, blah. So they're basically saying they acknowledge that they had a problem they didn't foresee, and they're building, redundancies and safeguards to make sure that if such a problem occurs again, it won't get to the level of affecting us members. They will be able to, intervene before it gets to that point and resolve it, or put us on a redundant backup or whatever it was. So I'm not smart enough to understand what that means. It's basically a non-explanation word salad. Like there was a problem with the part of our system that integrates modules and nodules. I'm like, okay, sounds good to me. But anyway, guys, if you look at the short interest, I think market makers were expecting a whole different type of ER, and I think they were expecting a huge hole in the growth story, which is why basically overnight, the estimated short interest went from the 11s on June 26th to on June 27th, the estimated short interest went up like 5% to 16%. Um, that is just a massive, massive short. And then that's basically been walked down. And then you see the ER coming in here at the end of July, and short tried to remain flat for a little bit after the pump and dump. But basically, that pump and dump also had some cover to, after they dumped all the way down, you see this covering and just steps. And now the short interest has gone down about 4%. It's down under 13%. Free float on loan, shares on loan, you just see have just plummeted in the last 3 months, while short interest remains basically stable. That's basically telling me that a lot of the pure shorts have gone to short long. There's a lot of hedging built in there, so that's why you don't see that much of the free float on loan, because they actually own those long shares. They could cover with those shares if need be. At least that's the way I interpret it, but I don't see how else that can actually be the case. I don't see how else this math works. But if you have another idea, or you know un poco más more than me, please tell me down in the comments. Um, so basically, I still contend that 813 has held the entire time since June, and it has flipped to support, and that there's no appetite to sell the stock under that level. No one has shown me anything else, so I continue to hold that belief. Basically, okay, what else did I want to hit here, guys? There's people are talking about this Instacart IPO. Like, I have come to the conclusion that this is actually going to be a really good thing. This is going to be one of the biggest and most influential sort of take the temperature IPOs in, you know, basically so far this year. And the interest rates and the economic environment have led a lot of people to hold off on the IPO. So this is going to be really critical. Just to read a bit of this article from TipRanks. Um, while the Instacart IPO marks a milestone for SoFi, the delay in reaching such a big deal indicates the challenges involved in improving retail access to IPOs. The ability to grab IPO shares at offer price can generate huge profits, and Robinhood, traditional brokerage, individual companies have tried to democratize this. Um, but IPO activity is picking up after a slump over the past 1.5 years. In addition to Instacart, SoftBank, backed by chip designer and firm ARM Holdings, and marketing automation company Clavio are aiming to collectively raise billions of dollars via stock offerings in September. Other companies have postponed or canceled IPOs, macro pressures, high interest rates. They're expected to make a decision about their IPOs on the market's reaction to these three key IPOs in September. Interestingly, Instacart disclosed last week that PepsiCo has agreed to buy 175 million of Series A redeemable convertible stock in a private placement to its IPO. Instacart also said that two firms, along with Norges Bank Investment Management and entities affiliated with TCV and Valiant Capital Management, have indicated an interest in purchasing 400 million of the shares of the IPO at the offer price. Overall, the reaction to these IPOs in September will determine if more companies will go ahead with a public listing. So there's going to be a ton of eyes on SoFi, guys. I think this is going to be really good publicity. I think Instacart is actually a fairly solid company. Now, of course, it's going to get overvalued and pumped at the IPO after the IPO, and it's probably going to come down a lot. But that's just the way these things go. You have to know what you're buying, and you have to buy it at the appropriate time, or you have to get in, but don't buy the hype right after the IPO. Anyway, guys, this is Stephen Fiorio, September 8th. Over at Seeking Alpha, Goldman Sachs conference confirms positive speculation. SoFi's long-term potential lies in its ability to expand its product offerings and become a top financial institution and generate significant revenue from its technology segment. Um, I just want to go through a couple of key points that he makes. I don't want to try to read the whole article. It's very boring and I can't do it justice. Just read it yourself. SoFi Bank continues to gain traction and many deposits are coming from the five large money centers. Basically, this is amazing analysis. I certainly do not have the time, patience, skills, intellect, tools to produce this type of work. So I'm just going to tell you what he says. I track the deposit inflows and outflows on 25 different banks, which include everything from large money centers and regionals to digital fintechs. Shown the inflows and outflows from Q1 through Q2, basically the last 6 quarters. In the table below, because SoFi received its national banking charter in the middle of Q1 2022, since its close, 15 of the 25 banks have seen between minus 3.53 and minus 195 billion leave their institutions, while the remaining 10 banks I follow saw between 1 and 50 billion in deposit inflows. Since Q1 2022, SoFi has gained the eighth largest amount of deposits, 11.58 billion, and on a percentage basis has seen the largest amount of inflows at 1,002.18%. And that's a little bit I understand that, but the increase is based on the fact that it just started as a bank. Like New York Community Bank was already there, like First Citizens Bank and Valley. Those banks were already there, so that's kind of a I wouldn't pay too much attention to that 1,000%, but these other numbers, this is legit. Like they added 11 billion in deposits, and that's huge. Like, Citigroup, added 2 billion, or it's like that is really a great number. Mr. Noto provided everyone who listened to the conference read the transcript some critical information. Again, talking about the direct deposits, how much of that is coming in. We've been over that a million times. Where in the last month of Q3, Noto indicated at least 2 billion in new deposits quarterly. I think it's going to be well more than that. And as they're suspecting, they're taking it from B of A, JP Morgan, Wells Fargo. The next question what's going to happen with the declining rates? Once rates start to decline, they're basically talking about, he goes into what the feds are saying, when it's going to come down. They're basically offering one of the highest yields, and they have several choices. When rate cuts start to occur, SoFi can reduce their API and still be a leader in interest and cash and increase their margin by 50% to 300 basis points, or they could leave their API where it is for a period of time and gain further market share as they would have the ability to do so. Mr. Noto sees a scenario where when rates decline, either SoFi's market share or spread between the interest paid and generated on loans increases, allowing them to acquire customers an attractive long-term value in a 12-month payback cycle. Okay, so again, they're talking about how Invest is growing. The existing members who utilize Invest has increased from 45% to 65%. Critical. Please keep Invest up and running. Please fix those mistakes. Get that thing reliable. And I know it normally is pretty reliable, but it's not the best, guys. And the Invest, when are covered calls coming out? For God's sake, how hard is that to implement? You already own Technesis, Galileo, Best in Breed. covered calls are not a risky investment strategy. They're a great way to generate money, and I can't believe they haven't got that out yet. It's just fucking ridiculous. A very bullish thesis regarding an ecosystem, and they go through the cross selling. It should be the comments from Noto should be looked at bullish. The rising rate environment. SoFi was able to achieve record originations exceeded 4 billion in Q2. And they go on to talk about when I put this together and use the numbers Mr. Noto provided, if 25 to 30% of members take out loans with SoFi, then every million members added account for 250,000 to 300,000 originations, and that doesn't include the people who take loans that aren't members. I'm expecting SoFi to see a significant increase over the next 6 to 9 months in student loan originations, and then when feds bring rates back to the 4% level, he thinks home loan originations are going to heat up. And then this is really the part of this article I think you should pay the most attention to. And again, I encourage you to read this yourself over at Seeking Alpha. I think they have a free trial, but also I really like the authors here. That's why I pay for the site. So you do you, though. I know you can figure it out how to read it for free. But I encourage you to read this one. SoFi isn't just a finance company, it's also a technology company. So they talk about basically that they can white label and custom brand their products for large originations. If large financial institutions such as JP Morgan had the underlying tech, they wouldn't be enlisting Thought Machine to deploy their cloud based systems for their retail banking. That's for damn sure. It's not as easy to build Galileo and Technesis as people might think. A bank can't just go do that. It takes it takes many years and, you know, hundreds of millions, if not billions of dollars to put that company together. I think it's worth far more than the sum of its parts. Um, so SoFi 2023 marks the first year in a 3-year cycle where they'll recognize annual synergies between 75 and 85 million in cumulative cost savings by transitioning to Technesis technology stack from 2026 forward. They're projected to generate 60 to 70 million in annual cost savings, and that cost savings should hopefully cover all of that goddamn stock-based compensation that we all love so much. The dilution that shareholders endured in the Technesis acquisition will actually pay for itself from just the cost savings, in addition to providing an additional critical success factor, allowing SoFi to innovate and deploy products on their timetables. Blah blah blah. SoFi is putting itself in a position to power the financial services of its competitors, generate ongoing recurring revenue. So I believe Galileo had 5 new clients. Yeah, they look at these revenues from lending, technology, and financial services. Look at the growth of the financial services. Technology has flattened out a little bit, but still, since 2020, it's grown. And they've talked about how the technology is sort of in a reset where they're changing what clients they're going after. And I think we'll see that come online a lot through 2024. And we'll see this red number go up quite a bit. The yellow number is skyrocketing, and the blue number has been going, basically all of these look really good, and they're all going to be contributing to profit by Q4, according to Noto and LaPointe. So anyway, Galileo 5 new, Technesis actually activated 4 new clients, so that's good. The really important thing is that they've been included in RFPs, request for proposals, with some of the major banks, and then when they see what Technesis can do, SoFi's actually also pitching them Galileo, and then they're looking at Galileo not only for processing but for some of their APIs. So that's great. The technology side generated 335 million in revenue and 68 million in contribution profit, trailing 12 months. Looking out several years, or just over 6 years to 2030, how should SoFi be valued if it becomes one of the biggest providers of cloud banking solutions, generating over 1 billion annually of revenue from its technology segment? They're operating at a 20% contribution profit margin. So every billion in revenue would produce roughly 200 million in contribution profit annually. I don't think the bears understand the technology aspect and how critical it can be for SoFi's future valuation. You see the contribution profit, like lending's bringing in all the profit basically now, but I kind of disagree with Steven in that aspect. I don't think it's that bears don't understand the technology aspect by 2030. I don't think bears care about what that's going to do in 2030, because bears are not here to short the stock for the next 6 or 7 years. Like, bears want to make their money matter of months, most years. They're not they really don't care. I don't think it's that they don't understand. Maybe they do, maybe they don't, but it's just irrelevant. Where do I see SoFi headed? What do I want to see going forward? He's talking about how good the stadium's going to be, how much this is Q4, the concerts, the adjustments upward in EBITDA, the gap net profitability. The critical milestones for me are 10 billion in adjusted net revenue, 2 billion in adjusted EBITDA, and 10 million members. And I think these can all be by 23 and some sooner than others. Yeah, I think 10 million members will be way sooner than that, in my opinion. I think student loans, home loans, all these things are going to drive members, the cross selling, the rewards, the stadium. I think SoFi is well on its way to becoming a household name and a top 10 financial institution. He'd love to see an investor day by the end of 2025. He wants to see SoFi build out business banking, take deposits, run payroll, issue corporate credit cards, payment cards, provide business loans. They already have the infrastructure. I want to see that by the end of 2024. They own all this goddamn technology. Let's do something with it. I'm not seeing enough. I think that we should have business banking and loans now. What's stopping us? Let's get this shit online. Come on. Anyway, I think investor sentiment and narrative regarding SoFi are getting stronger. Proofs in the numbers, member base, bottom line numbers, margins are increasing. And read Noto's comments at the Goldman Sachs technology flopalooza about incremental EBITDA margins. It's just extremely impressive. It's like Dr. Dolbeck said about Brennan's little brother. He's like, God, you're impressive. This is a long-term investment for me. I plan on being in this 5 to 10 years. I agree with that. Generating returns. So I'm looking forward to the Q3 earnings release, and I still believe shares can reach $15 by the end of the year. So another great article by Stephen Fiorillo. Get on over to Seeking Alpha and get you some. Guys, very, very low volume today. It's almost 10 a.m. out here on the West Coast, almost 1 p.m. out in NYC. Stock is doing really, really well. It's people are buying the SoFi stock, guys. 850 looks like short-term support. 813 is very strong midterm support, and $8 is strong long-term support in my book. I just don't see the stock breaking back down below 7 or 6. I think people who see that are crazy. Institutions are going to come in ahead of net profit. Shorts are going to cover ahead of net profit. A lot of these institutions that are short long with big positions are going to switch to pure long. I just see it plain as day. So guys, Fiorio thinks SoFi can be 15 by the end of the year. I'm calling 1375 or better once they announce that net profit. So he is significantly more bullish than I am, but he is also far smarter and far better informed, and just his analysis is superior to mine in every way, shape, and form. So hey, if he's saying 15 by the end of the year, who am I to argue? Who am I to disagree? But guys, this is the SoFi stock. I can't believe I've been talking this long. God in heaven, I hope no one is still watching for your sakes, but if you are, I really, really appreciate it. Thanks for watching Un Poco Mas. My name's Danny Dealsford. Hurricane Lopez and Stock Karen. We hope you have a great rest of your Friday, a great weekend, and forget about your stocks. Go out and enjoy the outdoors. Have some fun with your family and friends. Your stocks and your worries will be here to greet you once again on Monday morning, along with your angry boss and every Karen you come across. Guys, have a great one. Appreciate it. Good weekend. Be safe out there. We'll talk to you soon. Peace.